This is a market review for February 19th, 2025. As you can see, today we closed bullish. Again, another very low volume day. It's possible these low volume days are something to be expected out of 40 weeks, or it's possible that it's just because we had two huge expansive candles right here. Now, looking at the next couple candles, next couple daily candles, meaning Thursday and Friday. If we look at the weekly time frame, we were above equilibrium of the wick. We're coming back down now. I don't see us creating another low, but again, it's always possible. Now, back on today. If we talk about bias, I was bullish today because if we look at 2 o'clock to 4 was relatively consolidating, and then it took off to the downside. All right, 7 o'clock rallied. We pushed lower. Each time it was going lower and lower and lower. Did I think that my bias could have been wrong? Absolutely. After it went down for 3 hours and, was looking to continue to be bearish, I questioned if my bias was right, but then it started reversing. Then I found an entry. Unfortunately, didn't get filled, but the bias was correct overall. We came up, took out this high, and then are retracing now. Now on the 15-minute, we can see bias a little better, but just in case you're wondering, the 15-minute is my go-to for picking whether, like what London does, because the hourly, there's only, 5 candles, so I like to get a little more variation available. So we see here 2 o'clock horizontal, takes a dip, so boom, bearish. This up here, I'm not going to lie, I was expecting us to come back and respect it off this 15-minute and continue there, but it didn't. Price continued to come down. But today we did have FOMC. I don't remember exactly if it's meeting minutes or whatever, but FOMC spoke today at 2, which means that the time before FOMC is a little iffy. Things are going to go a little higher, a little lower than they usually would. And case in point, this. Price didn't come down to sweep anything. It didn't come down to fill any inefficiency. Didn't even hit equilibrium of these wicks. It kind of just came down to come down and take people out and manipulate people. And that's kind of what FOMC is all about. So, if you were in at the right time, you would have been very generously rewarded. So market opened, we shot down a little bit, didn't take out any high time frame liquidity, check out this one. And then around 10:15 we started reversing. Reversed, hit this 15-minute once more that was reacted off already here. Hit it, rejected all the way back down, and then we continued up. Lunch kind of played horizontal, coming to take out internal liquidity here, also filling in this 15-minute inverse, which was validated here and here. So hit this, continue playing bullish. Algorithm kicked back in at 130. We took out internal liquidity, meaning we filled an inefficiency, and then we expanded up higher for a daily target of these highs. And then obviously we retraced the last hour to untouched liquidity, which was here and here. The 5-minute, we have a couple inefficiencies. Again, you can see there's no reason for price to come down here. There's this little thing that's already been touched. If you look at this candle here, body's closed below it, doesn't really make sense. The wicks don't go anywhere important. So comes down, the macro technically starts the reversal. This 5 minute here was validated for bearish purposes, and then it was actually switched to bullish purposes right here and here. To continue the expansion, another 5 minute here. You can see better this right here, this candle to this candle is the 15 minute. We get a reaction off of bearish here, come up, tap it one more time, consequent encroachment reaction, expand again, close above it, come back down, use it once, use it twice. That's what keeps price from going lower during lunch. And then get an expansion, algorithm kicks back in, we take out internal liquidity, meaning this low, filling an inefficiency, and then playing in the given direction for the day to target these highs. Once we did hit those highs, we started reversing. We pumped up, reversed one more time, then we tipped over. I don't think this is an SMT. I would have seen that. Yeah, 250. 250 is the high here. Yes, 250 is the high here. So no SMT. Falls down. This high is 283. This high is 283 and a quarter. So perfectly just to get into a trade on this 5 minute. Takes us down. Uses as this candle closed. We come up, use this 5 minute over here as an inverse. Once again, it was validated right here. And so we were targeting untouched liquidity, which was this low. And this low, we did get this low, but then we're unable to target this low before market closed. Now on the 1 minute, we look here, SMT caused this bullish move here. We tipped over again, boom, another SMT of these lows. For the opening range, meaning 9:30 to 10, ES and NQ were a little decoupled. ES was kind of going horizontal, and NQ was obviously trending downwards. So this right away told me, okay, these are not tradable markets. You don't want to be in this. That paired with FOMC later today kind of steered me away from a trade. But I'll talk about where I wanted to enter. So again, this SMT caused this little retrace up here. First presentation, 1, 2, 3 times. Takes us lower. Again, nothing really down here. I mean, there's this inefficiency, but again, we come way too low for that. There's a small one down here, which we do actually come down to, but that's kind of ridiculous. If this is what's making price come all the way down here without taking this liquidity, that's kind of rough. But I don't believe this is an SMT between this low and this low over here. I don't believe that's an SMT. So during the macro, the things that I remained bullish all day because I've learned that sometimes the market on FOMC does things for a little longer than they should, goes a little higher, a little lower than they should. So I said, all right, my bias is usually right. I'm going to stick with it and see what's given to me. So first confluence here. This fair value gap right here, gap between these candles, created, boom, rejected, now becomes an inverse, a validated inverse in my opinion. So once price closed above here, I was looking for price to come down and then use it in a bullish manner. The reason I didn't enter off this was one, because there was no SMT of these lows. Two, it was reacting off of this 5 minute, which at this time was a regular, it was bearish fair value gap. It was a sell side imbalance, buy side inefficiency once this happened. So just in case we still had a little more bearish juice in us, I didn't want to get raked across the coals and then have price go bullish. So I was waiting for this reaction. Again, we had another fair value up here, this time a buy side imbalance, sell side inefficiency, wicked all the way down here and closed right outside of it. In my opinion, that right there validated it. So this inverse fair value gap paired with this validated fair value gap, I was looking for price to come up, close, and then come back to this bullish fair value gap, buy side imbalance, sell side inefficiency, and treat it as a reclaimed bullish fair value gap. So my limit order was here at 147.50. And price made a low, if you look up here, of 148.50. I was 4 ticks off. And at this time, I would have had to go to class. So this is what I would have done. I think I would have put my stop below here. And then I would have targeted a 1 to 2. And it would just be it either takes me out or I hit a 1 to 2. What would have ended up happening? Price would have came up. I marked, as you saw earlier, this 5 minute, expecting that it would come down or come back to it, especially after this reaction over here, right there. So this reaction, would I have been a fan of it? No, but with these closures, I would have understood it. Especially since the candle closed here, the 5 minute candle closed here. We opened the next one, boom, there. So we closed above it, came back to it. And then we expanded up higher, higher, higher. I believe my stop was at my profit was at 199. So boom. We hit it right here. Tap into this 15 minute fair value gap here, which once again, boom, validated. Let's do this because it's still bearish for now. Hits this, reverses down, takes out these lows, and then we continue our bullish price action. Again, closure still in this 5 minute inverse. Bullish move up, retrace, another expansion, 5 minute created, tapped into it once, twice, 3 times. Lunch kind of just consolidated. Price did take out these lows over here, played bullish. And if PM session is going to continue AM session's movement, I'd like to see a sweep of opposing liquidity, meaning sell side liquidity or internal sell side, which also means an inefficiency. So what do we get? We get a rally, a retrace into this 5 minute, which also gets filled into this 1 minute. If we look at equilibrium of this whole move, boom, this is the first fair value gap after equilibrium right there. So would this have been enough to get me to enter? No, right? Because that's one confluence. That's one. A 5 minute and a 1 minute, technically, in my opinion, are still one. Now, where I would have entered, get another expansion, I would have entered here, this candle. Would I have been a fan of this closure? No. Would I have stayed in is the question that I'm asking myself, or would I have cut the trade? Well, this is what it would have looked like. Entry there, stop below here. Yeah, probably would have thrown a constant encroachment because this is still the 5 minute, and I would have been okay with it tapping into that. And let's just say we target these highs, just the nearest liquidity. So we hit it, create it, big expansive candle. I probably would have set a limit order. It would have came down, hit it. I may have closed here. Because if we had an order block or something over here, I would have understood, but we don't. And I don't see anything that would warrant a closure here. Oh, but I wouldn't have taken anything because it's FOMC. So that explains the randomness. But nice to know that it still respects things there's just a little more air, a little more drawing outside the lines. We get another bullish expansion before we hit the daily target. 1 pump, 2 pump, 3 pump, retrace, take out this low, market structure shift here, boom, 5-minute fair value up here, validated along with here. Then we come down, take out this low, create an SMT of these lows, which signals that we're going to have some bullish price action. And what determines whether that bullish price action is a bullish continuation or a retrace is the overall bias. And since we're in the last hour of trading, we're looking to touch untouched liquidity, which at this point would be these lows. So we retrace back up into this 5-minute inverse at this point. Hit it once, consecrating encroachment, come down, up once again, SMT of these highs here, which again signals bearish movement coming because it's on the highs. And with the bias, unfortunately time got in the way, but with the bias I would have targeted these lows. And we ended up hitting those. So as far as the next couple of days go, we're very in a consolidation right now. Grammar doesn't really work, but we're in consolidation right now. We had a 4-day week, Tuesday, Wednesday were kind of, what am I talking about kind of? They were very small days. I'm feeling accumulation, manipulation, distribution, but the question I'm asking myself is it too late in the week? Is it too late in the week? What I could see happening is tonight we absolutely rip this low. And by rip, I mean like we just take it. We take out this low, and then if we take out that low overnight, and then New York session plays the expansion, the candle will look something like this, but we'll have taken out a low, so manipulated people bearish, raked them, absolutely raked them, not raped them, bullish. So we'd have taken out anyone that was short, and then the bias is going long, targeting these highs, and we're definitely not going to get this week. But I like to make a new weekly high. So with this accumulation, I'm looking for manipulation below these lows, and then distribution above these highs. Now, I'm not sure if it's too late in the week to see a new low made and a new high made. 40 weeks are not necessarily my specialty, but it'll be a good learning experience. The thing that's giving us a float right now is this, and this order block. I would be okay seeing this low taken. If we want to come all the way down here, that's okay, but I do think that that would have us play more bearish the next week. Because Friday we still have TGIF, and how we're looking right now, we don't have much of a range. So I really don't know. At this point, it's a wait and see type of thing. So we'll see what London brings and then make our decision tomorrow morning. This has been your market review for February 19th, 2025.